What's going on, everyone, and welcome back to another episode of Freshman Finance. My name's Patrick.
And I'm Basha.
And today we're discussing all things index investing.
So in this video, we're going to cover what on earth is an index, how you can buy the market, what type of indices are out there, and there's some seriously bizarre ones. And finally, who is this best suited for?
So get ready to learn about our preferred way of investing.
Let's just jump straight into it. So what is an index? Ultimately, it's going to be a person or a committee that sits down and comes up with a list of rules about which companies and how many are going to be included in this index. And usually these rules will also talk about when a company needs to be replaced.
One really easy way to think about it is like going to the supermarket. Whenever you go to the supermarket, you go up and down the aisles, you'll select different variety of foods. You'll go to the veg section, you'll get some meat, maybe a collection of breads, some frozen foods, and what you end up having in your basket is an overall representation of the supermarket itself. This is exactly like an index. A group of people will select a range of companies that represent the economy as a whole.
Let's start with an example. Let's use the FTSE 100 index. So the FTSE 100 represents the top 100 publicly traded companies in the UK. So FTSE stands for Financial Times Stock Exchange, which tells you right away which two groups were responsible for creating the rules about which companies are going to be in this index. Today, it's actually only the stock exchange that is responsible for doing it. 100 tells you exactly that there's 100 companies being tracked by this index. You can easily Google to get a list of the 100 companies included in the FTSE 100. And you'll find some names that you're likely familiar with, like Barclays is in there, the BT Group. You're also going to find Marks and Spencer's. As you can see, the list is quite long. Essentially, these are the 100 companies that represent the UK economy.
Great. So now that you understand what an index is, you might be thinking, how on earth do I buy one of these things? Don't worry, it's not going to cost you a fortune. You won't have to sell your kidney. We're going to show you how.
If you want to buy an index, you're going to choose one of two instruments. It's either going to be the index-linked mutual fund or an ETF. And yes, I know these words sound super fancy, but they're actually pretty straightforward instruments. The idea is that at all times they mirror the market. So when you buy either an index-linked mutual fund or an ETF, you would own all the companies in the index at the exact same percentage.
To break it down a little bit further, if you own the FTSE 100 index, as we discussed earlier, and that goes up 10%, your index fund that replicates that market should also go up 10%. And vice versa, if the FTSE 100 goes down 10%, your index fund, which follows that market, will also go down 10%.
Now, it's not exactly a 10% perfect because one thing that we need to account for is fees. Although for index funds, they're relatively small, they're still going to be in there. So if the market goes up 10%, your index fund might go up 9.9%. So if they're both tracking the market, how are index funds and ETFs any different?
One major trait of an index-linked mutual fund is that usually there's a minimum investment required. Now, this can range a really great deal depending on which fund you buy, so make sure you check out the fact sheet, or it's called the prospectus, to see what that charge is. With an index-linked mutual fund, unlike stocks and shares, the pricing is actually set at the end of the day, at the end of the trading day. So when you buy an index-linked mutual fund, it's a fixed price that you pay. With an index-linked mutual fund, you actually don't pay any commission fees. However, you do pay fees for the ongoing operational cost of that fund. Usually an index-linked mutual fund, you can buy or sell through a brokerage, like the one I use, Vanguard. The dividends that you make are automatically reinvested back into your fund to actually help you buy more of that position.
An ETF, it stands for an exchange-traded fund. As the name says, it's traded on the stock exchange. which means that at any time when the market is open, there will be a buy and a sell price available, which means that you could buy and sell the ETF throughout the market open. Since you are actively trading the ETF, there's also an additional fee associated with it every time you would buy or sell that ETF. This fee is usually referred to as the commission fee, and it is something that is paid to your broker. However, recently some brokers have started offering commission-free ETFs, and it's something you might want to look into.
So what type of indices are out there and what can you invest in?
And there's a lot out there. So like we talked about, there's an index tracking the UK economy. You'll also find indices out there tracking the US, the German, the Chinese economy, basically most of the economies in the world today. You'll also have indices for bonds, and you'll have ones that are tracking something very specific, for example, the price of cattle and hogs. Then we get into some really niche stuff. So you'll have, for example, the Global Millennial Thematic ETF, which actually tracks the spending habits of millennials. So companies in there will be Amazon and Nike, which are pretty popular with millennials nowadays.
One of the most interesting indices we've come across is the Obesity ETF. This is an index fund which actually tracks companies that are set to profit from servicing the obese. Index investing is a great option for those who are looking to invest for the long term. Personally, it's exactly how I invest my own money. I like the idea of having a passive investment account where I'm not worried about the crazy short-term fluctuations of something like a stock market. Historically, index funds have actually outperformed the vast majority of fund managers who are charging high fees and trying to predict the next Google.
So there's a reason that Warren Buffett, probably one of the greatest investors of our times, has instructed his trustees that upon his death, they are to invest the majority of his fortune into one index mutual fund. And that's the S&P 500, which tracks the top 500 publicly traded companies in the US.
We hope you guys have enjoyed learning about index investing with us, and in the following videos, we're going to be discussing the pros and the cons of index investing and how to select the right index for you.
So thank you so much for listening. Please leave your comments below. Don't forget to subscribe to our channel, and we'll see you guys in the next one.